Hey guys, this is a market update. In this video, I want to go over the main reason why I think the bull market continues, and it is US trade policy. They're telling us in public exactly what they're doing, and we should listen to them because their trade policy matters. This was the tariff tantrum here, this big sell-off, 400% tariffs. And this was the V reversal after they pulled a lot of that back. So their trade policy affects prices, and we should listen to what they're saying. We've had this breakout here, really great breakout, strong breakout for the weekly candle, right? Bit of profit taking last few days. It doesn't matter, right? Let people take their profits. It's an all-time high. We get that. But we go a lot higher in the rest of this bull market, I think. I'm looking for this box, right? My little red box here as the kind of tail end of the bull market where, you know, if you've got trades, maybe get out of them. Don't mortgage the house up here. But we're still trying to break out into that right now. ETH at 4,000, other altcoins getting bid up. That's the bull market, right? Alt season. So if you do trade Bitcoin and crypto, check out Bybit below. If you haven't got an account yet, click that link, sign up, make a deposit, and Bybit will give you a deposit bonus to trade with. Whatever you deposit, they'll give you a bonus all the way up to $30,000. I took the transcript from this recent Scott Bessent interview. I put it into Grok and I said, please summarize what he said and put it into the kind of main policy goals of what he's talking about. So this administration, they have very clear policy goals. They're not secret about them either, right? They're telling everyone exactly what's happening. And so we can just look at what they're going to do and figure out if it's going to be bullish for Bitcoin, right? Which it is. So they have a few policy goals, but the main thing, and especially the Treasury Secretary, right, where he's responsible for selling all the bonds, his main goal is to drive GDP higher than debt. So they have, the main thing he will look at is debt to GDP ratio. And they want GDP going higher than the amount of debt created. And as long as that's happening, he's kind of okay with everything. The policy goal definitely isn't to reduce the amount of debt, to pay off debt, or to reduce the amount of currency in supply. That is not the goal and will never happen. We know that can't happen, right? Because the debt is the currency, right? So if you take currency out of supply, you crash the price of everything, and then the debt to GDP ratio actually goes even worse, right? So the policy is to grow the currency supply, grow GDP faster than the debt. So that's what they want. They want a huge GDP boom, faster than the debt growth. So that's the one thing. However, that's massively inflationary, right? So on the other side, what they need to get is the CPI, all the manipulated metrics of inflation like CPI, PCE, all of this, garbage. They want to get that as low as possible. So energy cheaper, and the CPI basket of Netflix and cockroach burgers, get that as low as possible. How do you do that? Unleash the free market to actually create, disinflation, right? So that's what they're kind of hanging their hat on as well. So massive GDP growth, trying to grow it faster than the debt, but not cancelling debt or paying back debt. And then hopefully deregulation actually increases productivity growth. So we'll go over these one by one. But just to say, this is the US dollar supply over time, right? It doesn't go down, and it never will go down because it can't. Once you've put currency in supply, you can't take people's money away. The debt is the currency, yeah? So nominal M2 goes up and up and up and up and up. That's it. So if you're valuing Bitcoin, which is fixed in supply and is a desirable money, versus a system of debt, it's only going in one direction, right? This is M2, this is on Fred, right? So the actual, central bank's website, right? It doesn't go down. It just goes up and then up faster, right? Over the long term, a huge growth in the amount of money or currency or debt, right? So with that in mind, their policy goal is not to cancel money and it's not to cancel currency. It's to inflate asset prices and GDP high in relation to the amount of currency in existence. Some of these policy goals are already enacted and some are yet to come. But look, GDP higher, inflate asset prices, try and get fake CPI as low as possible. So tariff strategy. Yes, it does earn some dollar income to pay for the big beautiful bill where they cut taxes inside the states. But the other important aspect of this is that there's no tariffs if you manufacture it in the US. So that leads into the second goal, which is the capex boom, which is really what they want. A big capex boom can increase GDP, and it is inflationary as well, but it pushes GDP higher, which is what they want, right? And that's reinvested dollars. From the Middle East, they got trillions upon trillions of dollars worth of investments from the Middle East, right? And I think there was a big negotiation there. where he went to Saudi and said, look, can you pump oil out, please? Get the oil price lower, which has happened. Oil price is lower. That leads into the CPI, which what they want to keep as low as possible. So that's good news for CPI. But the investment boom and, you know, a lot of countries in the Middle East getting first dibs on a lot of AI equipment as well. I mean, there was obviously a negotiation there, but that was what they're trying to do, right? Big capex boom, huge investments, get GDP higher. That is inflationary though, right? So what they're hanging everything on is that AI and the free market will start to disinflate prices as it comes in. And yes, it will. Will it come by Q1 or Q2 next year like Scott Bessent thinks? We don't know, right? But the free market does disinflate prices. They need that to happen to keep the CPI basket lower, even though asset prices are going higher. And of course, they want interest rates a lot lower because they want to basically inflate house prices again, which increases asset price inflation, which can grow GDP higher as well. So that is what they want, right? They want interest rates lower because that helps them out with the amount of currency that they have to spend out and create debt for. You're creating debt to pay off previous debt. So they want interest rates lower. They don't have much control over that. I don't know what's going to happen there. The AI boom, we don't really know what's going to happen there. But what we know is happening is a huge investment boom that they want to encourage. So a huge investment boom and asset prices higher. That's definite because they want GDP higher than the amount of debt that they create. Currency never goes down. It never, ever, ever goes down. It just goes up or up faster. That's it. So you have to own real money and real assets. They want to inflate assets in relation to the currency because then they can debase the purchasing power of currency over time. So that's what the whole game is. So it's good for risk assets. And I think we just hold safe until we hit the little red box for Bitcoin. And that's the kind of end quarter of this bull market. You're seeing bits of it happen here, altcoins getting bid up, right? So we're there, but not in the final stages. So I think we just keep tight and we keep waiting and we sell at higher prices. If you trade Bitcoin or crypto, Bybit deposit bonus down below. The Crypto Investor course has 300 videos as well and private Discord servers. You can ask me questions in there. I'll link it below as well. I'm James, this is Money DG. Cheers for watching and I'll see you in the next one.